Hi everyone, welcome to Monday the 13th. Every 13th is turning out to be bad. And in stock markets, every 4 or 5 years, there is a massive flood. Last time this happened, it was the pandemic fall. And whenever there is a huge flood like what we are going through right now, there are some people who struggle to stay afloat. And there are some who really enjoy the rains. Note that they don't know whether it will rain tomorrow or not. Remember, in the journey of Nifty since the year 2000, there have been hiccups. Actually, 2000 started with the biggest fall in terms of percentages, the dot-com burst. And then we had the mortgages meltdown 2008. Then we had pandemic. Over time, all these falls look minuscule. This fall also, if you see, in Nifty, the length of this particular fall is nearly the same as pandemic. Everything is not percentage in life. And the results came a little late. Angel 1, I have not analyzed the result in detail, but the results year on year look fine. That's especially considering the fact that they had regulatory action on them. Also, HCL Tech, the numbers just came out 2 minutes back. The net profit is higher, 5.5% up. 18 rupees dividend seems in line. Market will take it. And remember, HCL Tech hit a new all-time high today, earlier in the day, in turbulent day like today. And Nifty had an average day today, no big surprises. Nothing in this list fell more than 5%. And today we have a new nomenclature, a slight improvement in the dashboard. This is a visual way of showing how much the stock or indices have fallen from their 52-week highs. If you see here, NTPC has fallen most in this bunch, 33.5%. Now, a lot of you would be wondering what happened to DMart, why that fell. If you see, the brokerages mostly have given the results thumbs up. This is good. I would expect institutional buying to come in very soon in DMart, if not retail buying. Defense pack investors met today and they passed a resolution. They are all turning long-term investors. They are saying that the goals will not be met in this particular budget. So they have postponed their goals to 1 year hence. They say that they will make money by end of next year, by the time of next budget. Shipping companies were decimated. Mazgaon Dock 9% down. The duo Cochin Shipyard and GRSC have now fallen more than 50% from the 52-week highs. The same resolution as defense was also taken up by the investors of the railways pack. Look at RVNL, down 9%. It had not even gone up. Who sold? The only good thing is there is no red here. That's primarily because most of these stocks have gone up a lot from their 52-week lows of last year. The fall otherwise have been sizable, 40% kind of losses for large stocks. Remember the story I told you with the Asian Paints Nugget, my personal one, my startup which failed. Same thing is happening in India now. Apple was buying raw material from China, giving it to India to manufacture. Rather, actually, India was not manufacturing Apple products ever. India was assembling them. So China has stopped the supply of the parts to India from its ports. The nugget today will be about what is spooking Indian markets and why I think that this fall is now getting in overdone territory. Also, there are some future warnings which we should keep on our radar because these could further spook the markets. In the Mayhem today, 4 stocks in Nifty stood out. 2 of them actually have been beaten down stocks that have not moved at all. Axis Bank and IndusInd Bank. And what was down most, pulling Nifty down most rather, HDFC, Adani Enterprises, ICICI Bank, Trent and SBI. Divi's Lab had a fantastic day because that fell only 0.7%. What impacted next 50 most? As usual, LIC at the bottom. This stock is falling like 9 pins. Zomato next, HAL, Adani Power and Lodha Builders. IOC, the largest oil marketing company in the country, that hit a fresh low today for the year. See, bunch of lows here also. Union Bank, IRCTC, Canara Bank, Bank of Baroda, PHEL. One thing to note is HUL-led personal and household products is at the top. This is a defensive sector. You might see investors hide here. Along with IT, food and tobacco also is defensive consumption. Nifty, Bank Nifty, Sensex, all 3 of them are in the red. Next 50, which has been falling a lot of late, that is not because it has gone up more than Nifty, Bank Nifty and Sensex in the recent times. 3 stocks in Bank Nifty hit fresh lows, Bank of Baroda, Canara Bank and IDFC. 6 banks in the private banking space hit fresh lows today. Only ICICI Bank has fallen less than 10%. Nearly each and every PSU bank today hit a fresh low. Investing pack, the first result was out today, Angel 1. If the market doesn't like them, then this entire pack of AMCs will get thrashed tomorrow. Remember, HDFC AMC results are out tomorrow. NBFCs which were looking horrible actually after introduction of this column looked a lot better. Muthoot Finance and Bajaj Finance are green, no reds. IT is mixed bag, not looking good in my opinion. The top companies are going up because people are moving money from the stocks that are falling to defensive. IT is one of them. These P's are getting bigger for 5% growth. Telecom was bad, Tanla made a new low. Vodafone is down 60%. Auto was bad, Hero Motors and Electra hit new lows. Ola Electric is in the red. No reds in auto ancillary, but 3 stocks hit fresh lows. Every stock in metal pack was red. Tata Steel, NMDC, SAIL and Hindustan Copper. The familiar pack hit fresh lows. Coal India and BHEL, the two big heavyweights that hit fresh lows. Adani Green is in the red here, 60% down from its 52-week high. NTPC Green, SJVN and SW Solar hit fresh lows. The cuts were big in the renewable pack today. The sector was down 5%. Pharma sector was down and down a lot. Lot less greens today. 5 stocks in the sugar pack hit fresh lows. Consumption actually looks good from this particular dashboard perspective. The grays mean the fall is less than 20% from 52-week high. ITC, Nestle, Varun Beverages, Jubilant Foods and Sapphire Foods. In fact, ITC's because of the demerger about 5-6% owes to that. So this sector actually is not that bad as much as this particular bunch of red reflects. Non-edible consumption also, HUL and Titan are grey. Pidilite is grey. In fact, Gillette is very close to green also. Page Industries is in the green. This dashboard is not looking that ugly in terms of what consumption has taken as a beating. Kalyan Jewellers another 9%. This stock is getting decimated right now. Asian Paints hit fresh low. Look at Trent, DMart, 5% each. Today each and every stock in the Adani pack is red. No point talking about the indices, the cracks were big and I get the chills looking at them, especially next 50, 4.3% down. Friday, I mentioned about the tsunami coming in the US markets, non-farm payroll ahead. The market looked really ugly at the end of the day on Friday. Dollar has crossed 86, 86.7 now and Brent has crossed 80, it is above 81. One thing I was really happy today about is that DI's net bought 8,000 crores. I was a little worried in the day. What if DIs started selling today? That was not the case. Hopefully DIs have a little more money left because clearly FIs are not short of shorting ideas right now. My trades for the day, I took my neck out and did some buying. Tejas was down a lot. I bought a little more of it, 1 unit. Novama I bought 1 unit. Trent I bought 1 unit. I moved some of the money remaining into ETF, Motilal Oswal's 100 fund. This fund was down 4.5-5% today. And I bought back Fusion. I sold it at 194 last week. So I covered the short position. Nothing sold. What is spooking Indian investors? First of all, Nifty top 15 versus rest, because this blurs the picture. And I'll just talk about this picture of the top 15-16 stocks on my dashboard. They have not fallen a lot. That's because many of them have not even gone up. Reliance in the red, ITC red, L&T red, Axis Bank red, NTPC red. Besides probably Airtel and ICICI Bank and IT stocks of course, nothing has actually gone up in the last 3-4 months. That is why there is not much to lose in today's market because of overvaluation. The decimation has already happened in the mid cap, small cap space. Gold, one of the biggest imports for India. The festive demand is over. Yes, there will be mini festivals later in the year. Akshaya Tritiya will come over very soon. Marriage demand is nearly over. Yes, there will be some marriages in February, but most of them happen in December. The supply is not required right now. Expensive supply is sold. The one which was before the tax was revised. Last quarter, Kalyan Jewellers, Titan, all of them showed lower OPM. And there are talks that government may say that, okay, let's get back the tax because that is not helping the government at all. They might revise the tax, maybe 5% increase now. And I'm sure all of these guys, Titan, Kalyan Jewelers, PN Gadgil, they would have bought a lot of gold just in case this happens. So gold demand in the next quarter should be a bit tepid or subdued. That will help the imports and stabilize rupee a bit. This data came in today. This graph is courtesy Money Control. The national coal index has dipped 13%, which means there is a lot of coal available right now in India. You might have heard that India has just 4 days, 5 days, 1 week of coal left for the power. Right now we are doing good. So government has a choice. Import a bit of less coal. Maybe the L&T chairman needs to talk to Coal India employees. Joe Biden has 1 week left and he is leaving no stone unturned to make life hell for Mr. Trump when he joins back. Today he has messed up yet again with Russia and he has put some fresh sanctions. Actually, I don't even remember when the sanctions were removed. They are probably just renewed or just reminded that there are sanctions. This has sent the crude levels up by 4-5% globally. Now, Mr. Trump is friendly with the Russian premier, the Russian president. In general, US is an ally with all the OPEC countries. US has huge interest in crude remaining subdued for now. What that means is I expect crude to come back very soon. Government spending, the current account deficit is in huge control right now. Thanks to government not spending the money in this fiscal year, the only sore point is that the capital gains related tax income will be close to zero for the government. That's because the gains are not there in stock market right now. In fact, STCG, LTCG will be carry forward in the balance sheet by the smarter investors, which means next year also the gains may not be there. Government will not want this. They will want the stock markets to be up by February end or March probably. Also note that RBI will give a record dividend for the third year. That's my anticipation. The cuts are deep. These are Motilal Oswal's ETFs today. 4-5% down at ETF level is big cut. Lot of SIP money will come in into ETFs and mutual fund at these levels. A lot of people have money. A lot of people are smart to understand that these are lucrative levels, especially to go into non-Nifty funds. Look at defense fund. 5.34% down today itself. Consumption stocks, like I mentioned, there is no red here. They are making a comeback. Varun Beverages is spending QIP money in Africa. There is an article today in Business Standard from MFIN CEO. MFIN is the organization that runs microfinance industry. Microfinance numbers are getting better now. He says wait and watch, but things are looking better. And I've said microfinance will bounce back strongly. Just give it 1 or 2 quarters to improve. If you look at the key commodities, copper, aluminium, zinc, steel, nothing is at record highs, which means inflation will not get alarmingly high very soon. Aluminium is a little high, but we produce most of the aluminium domestically. We don't have to import. Same with steel. In fact, steel is getting dumped. That is impacting steel stocks. They are making new lows right now. Hindustan Zinc has been red for a while. Hindustan Copper hit a new low today. FI outflow has been moderate. FIs can dump 1 lakh crore also in a day. Why are they not doing it? They are not going outside India. They are trading. They milk the markets. Coming to the warnings, DII outflow may be a problem. Right now, DIIs have been buying only January as well as the previous months when FIs have sold in heavy quantities. DIIs have absorbed the supply. When will they have to sell? When domestic retail, they ask for redemption of their ETFs and mutual funds. Hope that does not happen. US markets have gone north only. They have not even corrected much. If they crack 10%, we will be down 15-20%. Crypto is influencing a lot of stuff right now, and crypto took a sneeze yesterday. About $500 million crypto was liquidated. Bitcoin cracked about by $5,000. Looking slightly better right now, but this is about $2 trillion. I'm just talking about Bitcoin. If there is a problem here, then the global economy will have a problem. Now, crude has just gone up 10%. In worst times, crude goes to 140 levels also. This could create global problem unless there is a control mechanism. I mentioned this earlier also. IT has a lot of money on the table. A lot of investors are hiding here. Hope IT does not crack. If Nasdaq cracks, watch out for this pack. There are a lot of large cap stocks here. These are all Nifty stocks, these 4. idea was not to scare you, but just be aware of these macros also. Hope this information was useful. Thanks for watching. Hope tomorrow is a good day. That's because the CPI numbers that came in today were looking fine. If there is recovery, remember there is a Sensex expiry tomorrow and we might have lot of short covering. Thanks for watching and I will see you tomorrow.